Hello friends, and welcome back to our new series on Advanced Candlestick Patterns. In our last episode, we explored the mystical world of bullish and bearish counterattack signals, and we also reinforced our learning by looking at some practical examples on the price charts. In today's episode, we're going to be talking about two more interesting candlestick patterns, namely bullish and bearish belt hold lines. As done in our last episode, we will not only be talking about the meaning and significance of these candlestick patterns and how to spot them on the price charts, but more importantly, we will be talking about how to trade them. We will also be looking at some practical examples on the price charts to see these patterns in action. It is important to note that belt hold lines are amongst the few candlestick patterns that are regarded as reversal and continuational at the same time. But before we delve into the world of belt hold lines, I would request you to drop a like on this video, hit the subscribe button, and click the bell icon to never miss an update when we drop future videos. So let's start with the first pattern in today's learning, which is the bullish belt hold line. The bullish belt hold line pattern occurs when a long green, or as we can say bullish candlestick, opens at or near the low of the session and closes near the session's high, without any significant upper shadow. This pattern indicates strong buying pressure from the opening price to the closing price, suggesting a potential bullish continuation or a reversal. The bullish belt hold line pattern is considered significant because it shows a strong bullish sentiment right from the start of the session, often signaling at a trend reversal or the continuation of an existing bullish trend. Traders may consider entering long positions when they identify a bullish belt hold line pattern, ideally after the preceding downtrend. Stop loss orders can be placed below the low of the bullish belt hold line candlestick pattern, and profit targets can be set based on resistance levels or projected price moves. Now let's understand the anatomy of a bearish belt hold line pattern. The bearish belt hold line pattern is the opposite of a bullish belt hold line pattern. It occurs when a long red, or as we say bearish candlestick, opens at or near the high of the session and closes near its low, without any significant lower shadow. This pattern indicates strong selling pressure from the opening price to the closing price, suggesting a potential bearish continuation or a reversal. Similar to its bullish counterpart, the bearish belt hold line is significant because it shows strong bearish sentiment right from the start of the session, often signaling at a potential trend reversal or the continuation of an existing bearish trend. Traders may consider entering short positions when they identify a bearish belt hold line pattern, ideally after the preceding uptrend. Stop loss orders can be placed above the high of the bearish belt hold line candlestick, and profit targets can be set based on support levels or projected price moves. Now that you've learned how to identify these patterns, let's take a look at some practical examples of the appearance of these patterns on the price charts. A bullish belt hold line was observed on Nifty's daily chart around its support of 19,200 on the 1st of September last year in 2023. And now you can also observe the outcome seen after the bullish belt hold line pattern was observed. Let's also take a look at a bearish belt hold line pattern observed on SBI's daily chart at its resistance level of 621 to 622 on the 25th of July last year in 2023. You can also visibly see the outcome after the bearish belt hold line was observed. And with this, we can effectively wrap up today's video. If you enjoyed our insights on these simple yet effective candlestick patterns, don't forget to drop a like on this video, subscribe to our channel, and hit the bell icon for more updates. As a quick homework, I would recommend you try and identify these patterns on the price charts and observe how the prices played out after these patterns were identified. Feel free to discuss your observations with us in the comment section below. We'll see you again soon with two new candlestick patterns. Until then, happy trading and investing.